I'm ready. Let me go ahead and share. Let me see. Share my primary and payroll. Here we go. All right. So tell me when we're seeing. Are we seeing a Perkins payroll menu?
Yes, I believe.
Good. So today's training, we are going to work on payroll control design, and what we're going to do is come at it, it's somewhat of a simplistic level, probably work on maybe more like a rate-driven payroll control. And I don't know, we did a training like this at one time, Brandon, but I don't know if you were there at that time. So I'm assuming you don't know, much of anything on this area. But if you know some stuff and you say move on, just tell me, but
Okay.
Otherwise I'm going to just kind of start at it sort of at the lowest level and kind of build up to a crescendo, hopefully. And the goal would be to continue to sort of layer, learn skills and then layer more advanced skills on top of the more simplistic skills, because the payroll control, if it's just a simple rate deduction, it's pretty straightforward, but then you can get into some pretty complicated ones that, kind of even make me have to really, really, really work at it. So, and sometimes sometimes you can take a half a day, maybe even a full day to construct it. And sometimes it's not constructible, and I'll explain that as well. And then we have to come at it from a different perspective, either programming or workaround or something. So it depends on what they're trying to do. And the combinations are infinite. So I guess another thing to say is that there's probably things you could build that I quite honestly would say at first glance can't be built, and then you actually build it and prove you wrong because there's again so much flexibility that nobody can really know how to do everything in a way. It's kind of one of those type subjects. So what we're going to talk about is mainly in this area of calculation, and we're going to talk about payroll controls. And so they're really all connected. So these are really all the things that connect to this thing called payroll controls, and payroll controls is something that payroll is based on, whether it's in the time journal with the payroll control code there, or in the payroll journal. It's all controlled by that payroll control code, which is table relationally connected to this table called payroll controls. So let's just kind of, at a first glance, just open up payroll controls and just at least get used to the card. And then we'll kind of come back to sort of how to set one of these guys up. So the payroll controls are data, and even though in a lot of payroll systems things is very basic, as Social Security, Medicare, and FIT, federal income tax, and so forth, are kind of almost hardwired. In this system, it's all data driven. So even things like Social Security, Medicare, FIT, state income tax, all that stuff is actually data driven. And so when we say that we've done the control for Ohio, yes, it's usable for everybody that's in Ohio, but it's still data and still could be changed. It might need to be changed because, well, Ohio can change not only the values within its algorithm, which is one thing, but the actual algorithm itself. They can say, well, today it used to be done this way, now it's done that way, they're not the same algorithm. And so when I say the algorithm, I mean you actually get the paper from Ohio and you actually look at it mathematically and follow it through from a mathematic perspective. It's not the same starting 1/1/2015 as it was previous to that. So there's algorithmic changes and there's value changes. When I say value changes, I mean things like the bracket limits. FICA is 6.2%, but let's say they changed it to 6.3%. God forbid, it's already high enough. But what do we do? How do we handle that? So those are the kind of things that you have to be concerned with within designing the payroll controls. So the payroll control, it's a 20-character code field. As you can see, you can get fairly verbose on it because you can see this is a good example where I've used quite a bit of characters just for the code itself. The type field is multiple types of types, and so I'm going to actually sort on that and sort of start at the top. And by the way, it's not alphabetical. When you sort on a field that's called an option field that has preset set of drop downs, then when you sort on it, it's actually sorting by the order it appears in the list. And so if I just kind of go down here and go type, and look at this, I just want to kind of open up this list for a second and we'll kind of talk about it. So in terms of payroll controls, they can be of all these types. And when I first saw this list, I was actually fairly intimidated. I didn't know what the heck I was looking at, and it just seemed ridiculous. But as I've gotten used to it, it kind of mostly makes sense. So I'd argue even some of it still doesn't make sense to me. The ones that do make sense are all of them, basically, but I really have not used week. I don't think I've never constructed a control that had a type of week. I'm not sure exactly what it produces or what it's for, as well as accrual, as well as split. I do know split is used by this core accounting system for something that we do very differently in K-12, which is sort of creating that substitute account string. So if somebody's charged to a particular set of GL codes, and then when you get to the benefit side, like the Social Security and Medicare, that needs to be kind of mostly that same account code with some things replaced. We did that completely a different way, and that is not what split. We don't use split. So I guess to make a long story short, at least for the foreseeable future, the choices of week, accrual, and split will not be discussed. We really don't discuss bonus. I mean, I can't remember the last time we did a bonus in a school. Don't do bonuses. They do longevity and other kinds of additional comps and so forth. But I've never heard them say, well, the school district really performed well this year. We're going to give everybody a $500 bonus. I haven't seen that and might never see that. So I don't spend a lot of time on bonuses either.
Here at TRECA, we do bonuses.
Okay. So, and who is that speaking? Is that Linda?
This is Linda.
Oh, hey, Linda. How you doing? Yeah. So, and again, having an earnings type of bonus can be helpful, particularly when you're trying to train the FIT calculation, as an example, to do a flat % on the bonus. So that's kind of why they distinguish earnings from bonus, is because you may want to build the FIT calculation to be sensitive to the fact that this is bonus dollars versus regular earnings dollars. So I'm just making the point that in the normal, not-for-profit school district side, well, I guess TREC is still not-for-profit. We don't spend a lot of time. So I'm not going to spend a ton of time. There's a lot of stuff that we could discuss on bonus I'm not going to cover, but we can certainly cover it in a later session. I'm just trying to more just whittle down what I am going to talk about. So paid hours are the things that you really don't key punch. You key punch like earned regular in the time journal, and then you'll see later on when we connect that payroll control called earned regular, it knows it speaks to a particular type of paid hours called regular hours. And the reason that we care about paid hours is because we still, excuse me, go ahead, Bill. Did you say something?
No, I didn't have anything.
Yeah.
Oh. Is that Dan? Who's on?
Yeah,
I'm not
that's
looking.
me.
Yeah, speak up if you join our calls. Who's on? I'm not looking.
It's me. I just joined. I'm sorry.
Okay, that's okay. Good to have you. Let me see who else so we all know. That's good. Okay, so everybody's identified. Linda, Dan, and of course got Brenda on here as well. Okay. So paid hours are important, but they're kind of automatic in the sense that when we code to earnings that are done through the time journal, the paid hour sort of companion, which is paid hours and or units for per diems, come in automatically, and we'll kind of show how that's all connected hopefully later on during these sessions. Maybe today, maybe not. Earnings is our biggest one, obviously. Earned consal, earned regular, earned over. All those are earnings. Earned coach, let's say. Those are all earnings. And by the way, the code is just happenstance. We usually put the word earned in front of it just to make it so that if we sort on the code, everything kind of clusters together so all the earnings come together. You'll find a lot of the convention of when we come up with these codes is designed to do that. So we really are very sensitive to the first few characters of the code so that things kind of are organized. It's only to make it more human readable. There's no real requirement for that. So that's just sort of the thought process there. Bonus we talked about. Income tax is generally relegated, I believe, to only two types. We're going to be federal income tax and state income tax. Unemployment tax will be either whether it's an unemployment withholding or an accrual. It'll be unemployment tax. Other tax is pretty much relegated. I believe, I'm not sure. Actually, I should go back. I think your local income tax, Dan, did you make that income tax or is that other tax? Do you remember? I just don't remember.
Honestly, I don't remember.
Well, let's just find out. So we'll just actually click on income tax. And, well, we can see it's definitely your cities.
Yeah, that'd be local.
Rita.
Your cities, and it's Ohio SDIT is also income tax school district.
Yeah. And then the other tax is almost always Medicare E, Medicare ER. And then we have some other ones that we've done that are Ohio specific, I guess. I'm not sure what this Medicare ER class is.
What that is when we did Perkins, we had not created the override segments. And so that was a way to split out the classified from the certified.
Right, but we don't need to do that anymore because
we don't need to do that anymore. Right.
Gotcha. Good news there. Net pay. If you have more than one net pay, we're all confused. We don't know what the heck you're doing. So net pay is just net pay is net pay. How's that? So again, if you find there's two net pays there, then I don't know what the heck you're doing. Pre-tax. Okay, so pre-tax, now you can see here let me just kind of resort that like that. That'll help. So all the annuities, I guess we put ANN in front of all those. And then these other pre-tax ones, we're using PT for pre-tax. That's pretty common. Just to sort of keep them all clustered together. We usually use another word, and sometimes two words in case college space 529. And then we have the description. So that's pretty straightforward. And again, I'm not talking about how we're doing the calculations on any of these. I'm just kind of talking about the code and the name at this point, and the type is really all I'm referring to. We're starting this very simple. SARES is this is the STRS and SCRS. Probably the key thing is the pre-tax employee deduction for both SCRS and STRS. And then we have the buyback, which the buyback is pre-tax, I guess. I didn't realize that. So when they're buying that, they're getting a pre-tax benefit for doing that. Pre-tax is interesting because in terms of reducing the basis for federal versus state versus Medicare and Social Security, just because it's marked pre-tax doesn't mean it's necessarily going to be reducing that basis. And so typically things like health care will across the board, as you already probably know with the 125 plan. But with the Social Security, with the retirement type of pre-tax deductions, we need to be very careful, very sensitive to make sure that doesn't reduce the basis when computing FICA and Medicare. And that's typically the case in almost every state. And so that's real important. And so I just want to make a point that that's one of the areas that we get in trouble a lot. And as we explain how we build controls, I think you'll see, Brenda, maybe why you could get in trouble, and I'll explain it as I get to it. So it's an area, just a sensitivity area I'm just kind of raising right from the very beginning. And it's an area that if ever, it bites us, if things are going to bite us, that's one of the ones that might bite us. Let's go to this one. So deductions are post-tax deductions. In this case, we're using AT. For after-tax deduction. We have an annuity here, this Hartford Roth, so the Roth is being taken post-tax, and so that's why it's marked as deduction. These are all, again, after-tax as well, so these are all considered to be after-tax. You can see there's an indication there on the medical one and so forth, after-tax medical, I guess if they opt out. We got one without description there, not sure why. And then UT, I'm not even sure what these guys are. You guys must know about it. These are utilities or something?
Perkins had some utility stuff they were deducting from some foreign teachers.
I don't even understand that. Why are they?
Well, they had some teachers coming over from, I don't remember, Japan or somewhere, and they were staying in a school.
Oh, funded
house,
facility, I see.
And they had to pay the utilities.
Oh, God, that's so mean. I understand. Okay. No problem.
Always something new.
Yeah, and these group term life deductions are always post-tax deductions. We talked about that last time, where with the fringe benefits, where the person is getting not cash, but has to be taxed because of a benefit kind of received in a non-cash way. There's always going to be an earnings record, and then there's going to be a deduction record, an after-tax deduction record. So we give them the money, we tax them, and take it right away. The effect is, of course, the tax effect. All right, let's look at miscellaneous. I can look at weeks. Not going to get any of those, accruals and splits. So there you go. That's kind of what I expected. I'll add miscellaneous now in. And these are all the accruals, generally speaking. So we use miscellaneous for what I call the benefits or the expenses of the actual district. So these are the actual expenses that you, the district, are paying on top of the employee's gross. And these are very important for the accounting people and for the budget people because this is what really hits their books besides the gross. All the other deductions, pre-tax, income tax, other tax, most of those really aren't that way. They're just deductions from gross. One key exception is in the other tax, of course, because if I go to other tax, throw that on there. Let's just turn this off temporarily. It's these ERs. So these ERs, like mainly these two guys right here, these are similar to miscellaneous in the sense they're creating expenses. So it's not okay if you say, oh, it's just equal to miscellaneous because you're missing those two. So if you're thinking about which controls are related to the benefit side of the business, the expense side of the business, there's two that always sit really in here for the most part. And I guess we have that Medicare pickup as well, I guess. Not sure, but okay. One thing to note also is this GL post type. So I'll go through that in a second, but you'll notice a complete difference there. Post expense and liability, post liability and cash. So that kind of gives you something right there. If I switch this to, again, miscellaneous. One thing that you're always checking for is to make sure they're all expense and cash. Expense and liability, sorry. We'll go through that in a second. These guys are just history ones, so they've been purposely designed not to, well, these I guess are a little bit different, right? Dan, you're using these for balances, is that correct?
Correct. Yeah, those are just balances.
So miscellaneous can also be used for what we call BAL controls. You'll hear that term a lot. Does it have a BAL control? And what we mean by that is that there's a certain declared amount. A good example, the classic example I think is FSA. So, FSA beginning of the year, they say I want $1,500 declared and I want it deducted this way, and you want the system to sort of stop when it's done. Well, what you can easily do is set up a BAL control and then transact just the beginning of the year initially $1,500 in there, and then the system will kind of keep removing from that balance and stop automatically. So if they want it, they set up, say, I want this amount taken each pay period, then, that's only, let's say, 9 pay periods. It would be gone by the 9th pay period. The system will just stop automatically. You don't have to know to stop it. You don't have to worry about it. It works for employee loans. It works for union dues. I'm not sure this looks like a union dues where we're just doing the balance here. And
right.
This is somebody's, I guess, you gave a Chapter 13 personal bankruptcy balance that we're working down.
Well, obviously that's Chapter 341. That's a dues.
Oh, that's a dues also?
Yeah, it's dues.
Even if it says Chapter 13?
Yeah, it probably should be 341. Probably, I don't know that.
Well, and remember, this is a very decently old copied version of the database, so who knows what the real one looks like. So let's not hold anybody to any of this stuff. But let's take a look at paid hours real quick, see what we got on paid hours. So paid hours, we have these guys. So this is regular hours, overtime hours. I'm not sure why we have STRS hours. We have double hours, I get that. Some of these I don't really fully understand. The ones I typically am used to, I'll just sort of click on and say, I know those guys. These other guys, I'm not exactly sure what they're doing. So what's interesting about this also is it's this post liability and cash, and they're made paid hour. So I'm not sure what the system does because normally paid hours don't go to the general ledger because the risk is, of course, it would go to the general ledger and it would be in hours. And do you think it's just probably this is just classified with the wrong type, Dan? I'm sure it is.
That may be. I think that's just classified wrong.
Yeah, I think so too.
And then the STRS, ours STRS is used for STRS employees on their, if a certified employee is doing an hourly job, then that is signed to them instead of our reg, because then it's tracked for service credit on the STRS report. So that's how we're tracking the STRS hours that will report back to the retirement.
Okay. That sounds good. And let's look at earnings too, because earnings is always an interesting one. Okay, so it's a decently long list. So earnings can be of a lot of different varieties. One can be just for the hourly. It would be like earned regular. So earned regular tied to hours reg, earned over tied to hours regular, hours hours over, I guess. Some of these are history, do not post. double hours, docking hours. Some of the stuff are salaried and so forth. There is a field that's helpful that you might want to add in terms of your filtering. I don't know if it's on the screen. I just don't know. It's called pay type. Is the pay type on there? Nah, we should really throw the pay type on that screen, but you can filter for it. Pay type, yeah. So the interesting thing is to test this against this guy here, because that says it's hourly, which medical fringe doesn't really matter, Medicare fringe, but that's fine. Let's just take salary. Okay, and then per diem. So the question then is coaching paid per diem? Is that how we pay coaching? So you can say to yourself, is it not? Is it yes, no, yes or no? Vehicle fringe, I'm not sure. I mean, that would mean that you keystroke it. I don't know if it actually gets keystroke once a year or it's one times an amount.
Yeah, they were keystroking it at Perkins.
Oh, okay. And that's really the concept. What you really think about is if it's set to hourly or per diem, it's going to get keystroked in the time journal. If it's salaried, then it's most likely going to drop in at some point or another in some calculation based on what the block status is and the date range status is and the jobs that it's established with. So you want to be consistent. You've got to think about the type of job and whether the job is marked salary and it's connected to a payroll control that's marked salary or vice versa. And that's an area that, again, if it gets that inconsistent, you can get some erroneous results. So from a support perspective, if you're getting erroneous results, is this job marked salary? Is the related payroll control marked salary or vice versa, hourly, per diem? That's one of the, again, things to be thinking about. Okay. So let's just go into a control. I'll just pick a control random. Earn Consal is probably a good one. There's any. So I'll kind of go into a control now. And we're just going to look at some of the fields on the card itself. And then we're going to start talking about some of the setups behind it. So the code, as I told you, is 20 characters. Don't use all 20, my advice is. It'll run off on some reports, and you won't be able to see what it says. So be concise. So we would never write earnings, contract salary we just kind of keep it short, and then we use our name to be a little bit more explicit. The type is very important. By the way, one of the things I will say this is that, Brandon, when you're creating these, and I'm sure, Dan, you feel this way, we never actually create one from the fly. We never actually hit, I don't think I've ever hit this new button practically in my life. I've only set up about 1 billion of these daggone things. I always find one that's similar, a similar pre-tax deduction, a similar after-tax deduction, a similar earnings controls, whatever's similar to what it is. Everything always has something else that is kind of similar to. And we always go to that control and click the button copy, and we put in AVF, whatever we want to put in. And when you hit OK, I just want to watch what happens. Be careful. It switches you. And so you're now in that new code. That's fine. You can finish it up here and continue. I've always kind of closed the screen, hit F5, and gone and find it. And then I go back and edit that. It's just a way for me to verify that there's nothing wrong. Everything looks fine. I've had some weird things where I've had filters. I don't know, just weird things happen. So I always like to copy first and go out and come back in. I'm actually going to delete this, actually, because I don't want to have this guy out there. Okay, Earn Consal again. So that's how you copy a control, and we never really enter one from scratch. There's just too many things to worry about. One thing is that when you do copy it, the source pay control will actually list here as to what you copied it from. And it'll be there forever. It doesn't cause you any problems. Even if you delete where it came from, it still is fine. It doesn't cause any problems. It doesn't use it for anything. If you might get totally annoyed with it, but it's just a way to say what you copied it from, and that's just basically all it is. The category code is up to you. We know that you do need to use it for the ones that are marked fringe. And again, I showed you last time on the fringe that it has a special checkbox. After that, I don't know really if it matters or not. It's really internal to you guys what you want to do. I know, Dan, you've maybe used a little bit. I haven't paid a lot of attention to the category code within the types because I already have our coding structure with the code, like we talked, PT, AT. I also have the type field. So, I guess a good example would be all the annuities could be clearly marked as a category of annuities and so forth. So I don't know, Dan, if you have a difference of opinion on that one. It's yeah.
We haven't used it for earnings in particular. I think maybe Heidi has actually done some things with it in a couple of places, but
yeah.
Not anything extensive.
Yeah, I think the area it would help you is maybe in the payroll control statistics report. You could say, go ahead and run me, again, all the annuities. That's my simple example. However, you could also say, give it to me for code equals ANN asterisk. And so if your coding structure is good, the category is buying you the same thing, but you still could have gotten it just by doing a nice simple filter on the code. So that's kind of why I haven't been overly thrilled with it. The fringe is important for the fringe earnings. So when you have the GTL fringe earnings and other kinds of fringe earnings, our K-12E test report, the payroll journal, differentiates if it's marked fringe in terms of trying to show you hard dollars of earnings totals versus total with fringe. So we do a little thing where we distinguish in a recap, and we can't do that if we don't know that that's what it is. So that's kind of where that is used actually. Okay, reporting authority type. We went through our reporting authorities before. If you remember, we had 4 types, I believe. We had federal, state, local, and other. And so you'll see on every single one, and let's just kind of now leave this one and go to, let me just kind of kill that out. Let's go to a pre-tax deduction. I don't know. Let me think. Dental. Yeah, it's a good one here. Okay, so this one's marked insurance, you can see. So notice it's other there. And that's important because when I click on this drop-down, it's only looking at type of other. Okay, so if it was set to federal, then it only would be looking at the reporting authorities that have been marked federal. So that's important. That's why it's important to get your reporting authorities correct from the very beginning. So if you set up a new control, you copy the control, you want to set up a new reporting authority, go do that. But then if you don't mark it as a type other and you come back here and this is set to type other, which it probably needs to be, and you do a lookup, it won't find it and won't let you put it in. So that's why it's important to really have your reporting authorities kind of indicate in terms of what clump they're in. They're either a federal, a state, a local, or another. Other is just, it's other. It's anything that's not the other 3 as already mentioned. So that's real important. The tax type code, I can't recall. Let me see what it looks up into. Federal, local, state. Yeah, I'm sure that actually is filled in. Let's look at an FIT calculation. Yeah, so it's set to federal. Let me look at your Ohio. SIT is probably set to state. And let's take your SDIT. It's not set up. And I wonder if your cities. It's not set up. I'm kind of wondering, we were having some problems with those W-2s at one point. Dan, do you think this was part of the problem maybe?
I don't know. I'm not sure what.
I thought you weren't getting the boxes showing up or something. I can't remember what it was.
Well, the locality name wasn't in the reporting authority.
Yeah, but once you put it in there, did it start to show up?
Right.
Oh, okay. I wasn't sure.
Yeah.
Okay. So, the tax type code, I'm not really convinced I know exactly what it does, but we can see that we do see it being federal and state clearly, but I'm not really sure exactly where it gets used. I know there's other areas that are real important. I'll show you in a little bit. Restrict deletions, again, I'm not sure. Again, that relates to the inability to really delete one of these if you have ledger entries that are kind of like a year ago or more. So if you kind of want to say, look, I don't want anybody to even accidentally delete this, even if there are ledger entries, even if there are many years ago, then I think the restrict deletions, I believe, is what that controls. I haven't really had any issues with it because I don't normally delete payroll controls. So anyway, so I just want you guys to know that. The GL post type is probably one of the most important fields on this screen. This is how the control knows what to do during the payroll journal. One is do not post to GL, and that's applicable for your hours and your paid hours. Hours being leave buckets, paid hours being connected to your time journal entry. Those never post to GL. Generally speaking, we might have some history deduction type stuff that comes in that it was just a one-time use for history loading, and that was not to post to the GL, and so forth. So, but for the most part, everything else will have a choice. And generally speaking, when you look at these three choices, I'm hoping they're intuitive to you. Post expense in cash really is earnings. It means I have an expense on my books, and I'm giving the other side of the entry is cash, really. And if you think about just paying somebody's wages, that's pretty much what that is. Post liability in cash really is kind of the opposite. I'm taking now your money away. I just gave you that money, and I'm just taking it right away, and I'm going to give it to somebody else. And that's really what post liability in cash is, and that's all the liabilities. Those are all the deductions that are getting from gross to net pay, if you will, earnings to net pay. And post expense and liability is everything after net pay. So expense and liability means I'm debiting an expense and crediting a liability, and eventually I cut a check to a vendor, and that is really what your miscellaneous types we talked about, as well as other tax ones were, the Medicare ER and Social Security ER, is post expense and liability. Real important. Don't want to get it wrong. Want to make sure it's right, and if it's wrong, funky things will result, and you'll find out. Hopefully you won't. Payroll posting. So the payroll posting group is, well, it's probably a little complicated conversation. First and foremost is to get to the payroll posting groups. They're not where you think they are. They're kind of in a funky place in the menuing system, but that's okay. You can just type in payroll posting groups. They'll come up. I generally don't ever go from the menuing system. I usually go right from here and click on it. The payroll posting groups, let's kind of hit advanced on that and open up that screen. Okay. First and foremost, you're not in the edit mode. So it looks like you're in the edit mode, but if I start typing something, nothing's happening. I'm actually typing now. I need to hit the edit list, and now I can start typing, 024, whatever. I'm going to escape and not change anything. Whoops. There we go. But anyway, so that's just one thing. I get very frustrated with the screen because I start typing and nothing's happening. Speed key, that's interesting that you guys put a speed key called undefined just to help you quickly put those values in. But what we really are doing here is if you look at the first, after the code, the first one column, and let's just forget this column for a second, earnings, liability, expense, those three, they're kind of speaking to the GL posting type that we just were talking about. So that's why it's a little bit of a multi-purpose data setup. So if you're talking about a deduction, an example might be FIT is a perfect example. That's only a deduction. There's no employer match. There's just a deduction. So as you can see, the only thing that needs to be filled in from those first, three key columns, earnings, liability, and expense, is liability. Because remember, it's liabilities in cash. And so it knows what to do with cash, but it doesn't know what to do with liability. And so that's the function, I guess, in this case, 0231. I'm sure if I do a lookup, it'll be FIT payable, right. So that is the lookup to the liability that's connected to the FIT account, and so forth and so on. So what do you do with the other ones? Well, the expense ones come into play when you have the expense and liability. So if it's an expense and liability, then the system needs to know where to go and do both the debit and the credit. This is the credit 0232, and this is the debit. Now that I've told you that, I will tell you that that's actually not used. And we haven't really chosen at this point to sort of, remove this column from the screen, as well as we've chosen to not error out if you leave it blank. So I guess what I'm trying to say is you've got to put something in there. Somebody put 1190. Let's see what 1190 even is. Other regular instruction. However, it's not used. The reason it's not used is one of the cheap things that K-12 Enterprise did is we delivered a more complex determination, if you will, of what that expense is really going to do based on the allocation of the earnings itself. And so it will go and look at the earnings, it'll look through the entire account string, and it will do some substitute math, which I'm going to explain a little bit later, to determine the debit. It will not look here, but if this is empty on an expense and liability payroll control, you will get an error. So I guess bottom line, you got to put something. I don't care what you put there, and it's not going to get used. So I guess that's a little bit annoying way to sort of put all that, but we're trying not to upset certain core parts of the system at the same time. So that's why we left it the way we did. We had a good reason to do that. So again, bottom line is if your expense and liability, the expense you still need to fill in, it's not going to actually get used. That liability account will get used. There's no reason why we can't get that in a table somewhere. This is the table. The payroll posting groups is the table. The earnings side, so the earnings account is for bonus and earnings control codes. So in those examples, they need a payroll posting group, and again, we don't really use it. So you can see they're all set the same way. This one is a little bit different, and we can talk about why that's different in a second. But this one, earned cont, it's going to 1110, which is a valid account, don't get me wrong, but the system will never use it. What it's going to use is going to use the allocation, and the allocation will tell it where it goes, and that'll be that. But if it was left blank, you will get an error. It's as simple as that. That really applies to almost all these in terms of the dimensions. One thing to note, though, is that the dimensions do count when it is doing the liability. So for the liability side, these dimensions are used, so they are important. So the example here would be that if this was all left blank on this row I'm on right here, these dimensions were left blank, you would not get an error in that situation. You would never have gotten that far. Now, that would not cause you a problem, but it does cause you a problem if you have a liability in motion. If you have a liability being used, these dimensions count because it needs to create the rest of the credit, if you will, to the dimensions for that credit, if you will. It's going to that liability account. In this case, FICA 0232, it's going to put the rest of it to those all zeros. And what somebody has done here is they set up undefined as a valid speed key, which now doesn't seem to be found anymore, which is ironic, but it was there at one time, and it helped to just quickly create these. I guess then it was deleted at a later point. One thing to note, I'll give you one little trick of a problem that we've had over the years, is that actually for some reason, I don't know how it happens, but occasionally this data gets in here, but actually has to also be in a drop-down. There's actually a drop-down table that it also has to be in. I've also found that if it's not in the drop-down table, errors will occur. And you see the drop-down table in the Navigate in the Dimensions option right there. So if I click it, and I would see nothing here, then I've got a problem. And occasionally we've seen that, and we think it's because of copying and pasting. We think it's maybe because of some legacy problems with some of the data. And my guess is it's been licked in the databases that you keep copying from, so maybe you'll never see the problem. But if you ever do see a problem with dimensions on a liability, and you go to this screen, you say, well, they're there. I don't seem to be there. Before you call our support department and say, I'm confused, click on this button. And if you don't see them there, then just re-enter them. I've found that all you have to do is just come on top of here and go 000, enter, and then it'll absolutely make sure it goes. All of a sudden you'll see one appear, and if you just do that for all the different segments, you're good to go. So it's very rare that we see that. I've just seen it a few times, but I just wanted to mention that. Now, in terms of these fringes, the fringes in the GTL are exceptions, in the sense that they are told, there's a separate setting in a little bit where we're going to look at where it says do not use allocations. So you can tell the earnings control not to use allocations. In that case, this earnings account will be used. So even though I told you it will never be used, I am telling you now that there is a rare example where you can actually turn the control off and tell it not to use allocations, but rather actually get it right from here. And the example is the fringe benefits, because there's no reason why you can't just go ahead and figure it out on its own. And notice that the earnings account and the liability account are the same. And that, of course, is because we want to create a wash entry at the end of the day. No effect on the general ledger. There is effect on the general ledger, but there's no effect, if you guys know what I mean. It's going in, it's going out. And so that's something that's real important as well. And that's why these are real. This is not real.
The bank account column, which I haven't explained, is under net pay. So if I scroll down under net pay, this is where the system actually ends up learning about the payroll bank account. And even though when you're doing check printing, you pick the payroll bank account and you need to be consistent, the system still needs to know, where do I get the cash account? And the cash account itself comes from the bank account posting group, which is connected to the bank account that's put right here. So again, net pay is the payroll posting group that's connected to the net pay payroll control code, in which the bank account is payroll, which has a bank account posting group that is connected to, that actually tells us what the cash account really is. So when people say, where is the cash account? I can't find the cash account. How do I know what cash account it's using? You have to trace right at the beginning. You got to go right to the net pay record, see what the payroll posting group is, see what the bank account is, see what bank account posting group it's connected to it, and see what that's connected to. And just to kind of go a little bit, just to show you that, if I go to the bank account lookup, and I click on Advanced, and I click on Edit, and I go to Posting, and I go to Bank Account Posting Group, and I go to Advanced. Oh, there you saw the GL account right there, 0102. So that's what I mean. The system is doing all of that navigation to get to that cell, and then that's what it's going to use. These are the dimensions it's going to use for the cash entry. Okay, so that was a little bit of a long explanation to the payroll posting groups. A typical problem is I do a copy button. I create a new payroll control, and I just go right past that field. I go blow right by it. And so it's a liability deduction. Let's say it's just some kind of after-tax deduction, and now it's coming out of a liability account that, because you didn't change it, it's coming out of a liability account that is not the one you want. So when you copy it, you certainly want to come in here. What do you want to do? Well, probably you're not going to find it. So you would go ahead and hit New, and I'll just call it AVF as a test, and I'll pick my liability account, 02, whatever, there. And, of course, I can't hit Undefined because it's now gone, so I'm just going to hit F8, 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 come down here. Again, I may go here and go Dimensions. Looks good. And the most important thing is to hit OK and accept it in there. Okay, I'm going to put it back to CIT because I don't want to make a change. But that's just kind of the flow you go through to make sure you get the payroll posting group in and you do assign to your new control. Print on check is real straightforward. Basically, we really don't pay much attention to this at all. Not sure what will happen, but I guess it probably would be smart enough not to get on the check. So if you had a deduction and you said no print, I believe it will on all our payroll checks drop off. So be careful. Typically on deductions you want current and year to date. On earnings, I think we only show just the current pay amount. I'm not sure even if you said current and year to date, it still probably would return it into the program, but I think it only displays the current amount. I don't think we show year to date earnings, at least not for every line. I know we do kind of a thing off to the side. In terms of balance, that's typically what your leave controls will be set to. So again, one thing that makes this screen a little complicated is this is used for every single type. And so sometimes it makes sense, sometimes it doesn't make sense as to when you would change some of these things. For instance, the next thing, display on check. Do you want the payroll control name or the filing status description? Well, if you think about it, it's only going to be applicable to a payroll control that is a deduction, typically a pre-tax deduction that's filing status driven, meaning that it's probably the health care deduction. And the reason we do that is that a lot of times it's nice if you get these descriptions correct, it's more information to give them than just to say medical, here in the name may not be quite enough. Maybe you want to see it's the PPO and HMO and maybe even the filing status, like married or single or whatever. So you have an option, but typically, as you can imagine, if you pick filing status description and you're in a payroll control that is a rate-driven control off the employee rate table, you are going to get probably not an error. You are very likely going to get a blank. So, and again, you may not. We may have programmed it in a safe enough to say that if you can't find one, it always goes back to the pay control name. So it's very likely that you could pick filing status description, and it just won't do anything but just return the payroll control name. That's how I suspect is going to happen. Normal sign. So normal sign, the way that we work in the payroll control, in the payroll journal, and we looked at this when we did our payroll processing, I'm sure, hopefully you remember, is that earnings are all positive, deductions are all negative, net pay is negative. They all net to zero at that point because that's how it's a balanced entry, and then all the expenses are negative. They show them all as negatives in the expenses just because they kind of are following somewhat the same sign as the deductions relative to the hit to the liability account. We're doing credits to liability, so the negative amount just represents that, I guess, consistently through both deductions and expenses and net pay. So then when you indicate the normal amount, so a normal sign, if somebody's in the payroll journal, in this example right here, let's just say you, for whatever reason, for this Clyde City income tax, they prove to you that for the last 3 months you've withheld an extra $100 that you shouldn't have. This time when it comes through, you can maybe make some adjustments to fix it going forward, but you could either insert a line or go to the existing line that's already there and come up to it and give them money, right? You're trying to reverse it. So you're going to type a positive, let's say $100 or whatever it is. The system is immediately going to pop up a message that says this is not the normal sign for this particular control. Are you sure you want to make this change? And you say yes or no. And so the point there is that it's just a warning, it's just a messaging thing. So, we're going to talk, I think, tomorrow about messages. Hopefully that's a fairly simple message to interpret. And I think the language is pretty clean there. It's completely controlled by this normal sign. So just keep that in mind. So earnings are going to be positive, and I believe everything else, including leave, I believe, will be negative. Not positive about that. We can look at that. The FICA Medicare flag is an extremely unused proposition. We actually don't have, I think, any districts, possibly New York, I'm not sure, but they basically, I know in Connecticut, it's very common to have because the retirement pension system, those employees are, at least for their contract salaries, exempt from FICA and Medicare. So in that case, they don't pay FICA Medicare in lieu of paying into the pension system. It's just kind of I don't know how that works exactly. I've never understood who made that law. Is that a state law? Is that a federal law? I'm just not even sure. But we do accommodate that. I don't believe in Ohio you have that. I think everybody in Ohio falls under normal FICA Medicare, so therefore I believe this is not a used option in Ohio. And somebody jump in if I'm wrong about that, but that's my thought at least. Okay. Post as absence and cause of absence code. So that gets into our leave system. So normally nowadays we've kind of changed the leave system than the way it came out of the box. So some of this is kind of the original stuff, so that when you brought in the payroll control, it kind of knew that the cause of absence was whatever. But as time went on, we realized that people really wanted to have multiple cause of absences under one control. In other words, we have personal, but then we have 4 or 5 reasons why you might be taking a personal day. And so today in the cause of absence table, we've expanded it dramatically over the last few years. So when you put in the code, it pulls the leave control. So really, it doesn't make sense to have the leave code pull a cause of absence. But posting as absence is important. Just simply says that when I go ahead and take an absence, there's a whole nother table that the system does keep track of that information in, that we kind of showed at an earlier time, I think, some analytics on. I think maybe it was one of our Tuesday classes, but Tuesday morning classes. But either way, that won't happen. It won't create it unless that leave control has that post of absence checked. So you do want that checked. The cause of absence code generally is not filled in any longer here because we're not going from control code to cause of absence. We're going from cause of absence to control code because we like that many to one. Edit status, I have no idea. I don't think you can change it. And so I think it's something that I guess some programs might be doing on its own in a temporary basis. So I'm just not sure what that is used for. So anyway, let's not worry about that. So that's the general tab of the payroll control. So I'm going to continue to move on now to the calculations control. Let me actually just close these up to make it a little bit simpler to read. Okay. Any questions so far, Brenda or anybody, Linda, Dan, everybody cool so far?
So far, so good.
Haven't fallen asleep?
Nope.
All right. Good. All right, so the calculate checkbox, let's talk about that for a second. The calculate checkbox is a way that when a payroll calculation is going on, and it really only applies, from my perspective, for things that are going to sort of drop into the journal when we're doing the calculate. Not really time journal stuff, but really stuff that you really just want to drop in, a deduction, maybe an earnings, like a salary, and so forth. If you have this checkbox unchecked and you do have calculation methodologies established, it won't happen. So I'm giving you one of the first things that can be a reason why it's not calculating. So somehow this I got unchecked, and all of a sudden it's not calculating any longer. So it is one of the things that you do want to check to make sure it's still checked if that's what your intention is. The reason I think it's there is that it's more about turning it off. So the example would be in the summertime, I could leave it in my master calc order, which I haven't fully explained, but I will hopefully either today or certainly tomorrow. But the point is that, you know, if it's out of the calc order, it's not relevant. It doesn't even see it. Doesn't even know about it during the calculation. But if it is in the calc order and this calculate is unchecked, then it's not in there. It just doesn't see it. So that's another thing, is it can shut down the calculation, and therefore it won't drop into the journal. And that could be a nice, simple way to shut down a calculating type of deduction, let's say, that you want to shut off during the summer. So that's something I want to talk to you about. Auto insert, we really don't use. Auto insert is kind of getting back to sort of Linda's bonus thing, in the sense that it really we'd have to think about how to establish bonuses, you know, properly. Because the thing about bonuses is, you know, where's it going to go in the general ledger? Do we have to set up a whole job to do it? Can we do it without a job? And so if we were able to figure out, I think we probably could, how to not do it with a job and how to deal with the general ledger part of it, which again I think is all doable, then the question is, well, how do I just keystroke it? How do I just get it into the batch? And the auto insert is really what that's for. And so if you click on auto insert, then you can run another routine in the payroll journal, and it will just, for a range of employees that you specify, maybe based on whatever class code, whatever, it will drop in, you know, if you have 100 employees that kind of meet that criteria, it'll drop in 100 records that you've marked as auto insert. Let's just pretend you did the earned bonus, or the earned bonus, or just the bonus. So if you did that, it would drop in just basically 100 empty bonus records, all filled in great with the employee's name and all that good stuff. And then you just sit there and just off a piece of paper or whatever, just keystroke the amounts, calculate another payroll, it just brings everything else in, and you're off and running. Or you calculate it and say, calculate just what's in this batch. Therefore, you cut it all, and you can cut it all to computer checks and give it out as a nice check. So there's lots of different conversations, Linda. You know, if you down the line, you know, want to have sort of an advanced bonus conversation of all the different possible ways to think it through, you know, I'm happy to do that. I haven't really spent a lot of energy lately on that, but we could practice it and just test it out and take it for spin on different concepts. But auto ins. Say again.
I just said, okay, that's
okay.
That's
Yeah.
nice to know.
Yeah, let me just don't call me like, you know, 20 minutes before the bonus run has to be complete. You know? That's all I ask.
Sometimes that's all I know.
I know. Tell them, back up the truck and tell them. Look,
Yeah.
Well, even if they think one's coming, I don't care if we have fake data, right? I mean, I don't need to know the amounts, right? All I need to know is, hey, I have the intention of doing a bonus run in the next few weeks. Can we set up a time to work through everything we should be thinking about to make sure bonuses are going to run smooth as silk? And what I would do if we did this, we would do more of a group session, because I want to just train more people at one time, you know, that kind of thing. So monthly schedule. Let's talk about monthly schedule. I love monthly schedule. It seems to work very well. Now, there was a payroll setup we went through last week, I believe, which said, when you're doing the monthly schedule, do you want to think about it from a check date perspective or a period ending date perspective? And again, I advise check date as being the main option, because I believe that's the way that most people think about it. If a deduction, if you're a bi-week and you're only going to do it the first and second, meaning you're not going to do it the third cycle, if there is a third cycle in that month, people think about that based on check date, not period end dates. They don't think about it in period end dates. Here are the options. There's quite a few options. I believe there's a few more there. Yeah, there you go. That's all of them. And they're pretty straightforward. Each pay period means whatever cycles you're doing, it's going to do it every time. The first pay period in the month, again, using check date or period end date. The second, the third. The third would be, to me, I guess it's only applicable for a weekly cycle, and the fourth really applicable for a weekly cycle. So really, when you get into like first and third, I just don't see that working in school districts quite honestly ever. Second and fourth doesn't make any sense. Last pay period kind of makes sense. That would mean that if you're in a bye week, it would do in the second one on normal months, but on the month which you have a third one, it would do on the third one. So that's kind of what last pay period would be for, I believe. I don't believe that's the last. It could be. I could be wrong. That could be the last pay period of the whole year. I don't think it is. I've never used it, so I'm not 100% positive. Most people seem to use each pay period first or second. Those first three options are typically the bread and butter options I see people using. In a little while, hopefully today, I'm going to talk about setting up your control groups. You can further intervene and change this monthly schedule at the control group level and then ultimately at the employee level for the same control. And I just want to make the discussion, or not the discussion, but the thought that you don't want to do that. You really want to have it controlled here and only here, so that if you change it, you don't have to worry about going anywhere else in the system. And I think that's a very important thing, and so I will kind of show you how to achieve that. And you need to be careful about it, because if you decide to make a change and you weren't disciplined about it, and you do have some of these monthly schedule values set all the way down to the employee level, on what's called the employee payroll control screen, you are going to have a problem, because you're going to switch it, and then those few people that seem to have it there are not going to switch, and we're going to have a problem. So that's why you got to be consistent there. Net pay test. So let's talk about net pay test. So net pay test, you have three choices there. Do not test. And what we're talking about, just so we understand the subject, and I'm sure, Betty, you're used to this, processing many payrolls, is the person's got some big-ass wage attachment, right, and they didn't make that much this week or this bye week or whatever, and so they basically don't have enough net pay to even have net pay, right? Their net pay is going negative, which, of course, in our system turns out to be a positive number. Since net pay is by default a negative number, negative net pay is represented as a positive amount. And so what we're saying to ourselves is we want to go ahead and adjust this control. And the controls usually aren't the tax type controls, because they're percentages and they will opt out if they don't make enough and all that normal stuff. The problem is the fixed amount deductions, such as healthcare and or child support, wage attachments, things like that. Those are the things that kind of get you. And so the question is, if in fact they don't have enough earnings to pay for this fixed deduction, and pretend I'm on the fixed deduction, that's the card I'm on right now, what do I want to do? Do I want to go ahead and just adjust it down to get the person to a zero net pay, which is what test and adjust amount means? So if I click that, then nothing else needs to be done in the setup, and the system is simply going to go ahead. When you do the calculate, you're going to see net pay is zero, and if you actually went through and said, okay, what is the normal deduction? It should be $412. I see here it's $230. Aha. Okay, I get it. That's what it does. The arrears tracking does the exact same thing, but it actually pushes it in a different payroll control. What I mean by that is it'll still say $412, but then you'll see a kind of a positive number, almost as if it's an employee loan being given to the employee to sort of set up a balance that you then can take it out later on when they kind of do earn enough money. And that's what arrears tracking is for, and that's what the next value is for, which is, okay, well, what is that payroll control that's going to hold that BAL? When I say that balance, it's got to have a balance. So that balance, I guess, has to go through the general ledger. So it has to have its own liability account, quite honestly, and it's going to be a debit, so it's going to be like a receivable, and so you may want to use an employee receivable account and set up a deduction and put that arrears code in there. Furthermore, you need to now define that particular deduction to be able to then take it away from them again, so when they start working again, they need to pay you back. And so that needs to happen. So again, it's usually all after tax, and usually you have to negotiate when they come back, but that's kind of how you handle what we call arrears tracking. It's not, super sophisticated in the sense that you have to sort of set up how much you're going to take from their paycheck going forward to kind of pay it back. And of course, they can come the next week and they can just add more dollars to it. Next week, more, or I say next week, next pay period, more and more and more, because they might be in some kind of leave status of some sort. But then, you finally, settle when they come back, and then they start paying it back, and that's kind of a district to employee agreement type of thing. These last two fields are important. They do show up, I believe, in the possible list. You can show these columns. Defined in master order. So if a control is not in the master order, that's probably okay for certain ones. Possibly like paid hours. And hours, the stuff that comes from the time journal does not need to be in the master calc order at all. Matter of fact, it slows it down. There's really no reason to have any type of control that isn't being calculated, if you will, really in the master calc order. So I kind of think of it in some ways as connected to the checkbox. In some sense, everyone that has calculate has to be in the calc order to pull in, but everyone that's not calculate typically very well may not need to be in the defined in the master order. It's not important because the system doesn't need to think about it when it's going to put something in the journal. It's either already there or it needs to be calculated. And so therefore they're kind of connected to each other. The calculation orders, we're going to talk about calculation orders in a little bit. So it says 2 right there, and if I drill that, I don't know if it'll tell me the 2. No, I think I can do a navigate to it. Calc orders. So it'll give me the 2 calc orders this guy is in. The master and the insurance premium holiday. Okay. Alrighty, so that's the calculation math fast tab. Distribution one. You can ignore that, and I do think that that's part of that split type of functionality, which we do not use. It would cause problems if you started clicking these buttons. So one of the things that we need to do, Dan, one of these days, and Bill, is remove this fast tab from the screen so we don't confuse anybody and don't have to even spend that amount of time on it. K12E probably tells you it probably relates to something that we did, which is true. So we have all these different things in here that are important. The payroll rate multiplier is really going to be only applicable, I think, in overtime and double. So let's just kind of go to earnings earned over. Earned over, Roger. There we go. Okay. So that's how the system is doing the overtime. It's just simply when you put the rate in on the time journal, because it has 1.5, it just grabs the job's normal rate, $10 an hour, times it times 1.5, rounds it to even penny, and says it's $15. So that's really what that's for. We do a differential capability, so sometimes people work, if they work like a night shift and you like earn night, something like that, they get their normal rate, maybe still a multiplier, but then they get a flat amount or a percent. And so flat amount, they get an extra quarter. So in other words, it would be $10 is $15, and if this was 25 cents, they get $15.25. And this would be not earned over, but earned night shift, something like that. So again, we do kind of shift differentials, if you will, is what that's called. The retirement category code, I think, appears primarily on the SARES and STRS deduction. So I think if we go there, STRS. Okay, so that's how the system knows that's the STRS contribution code. That'll flow in automatically, and that's important for the retirement reporting. Blank that out, it doesn't come in on that payroll journal line, it doesn't go to the ledger, and messes up the reporting process, the workspace. So I don't think it appears on any of the earnings records. I think there it gets in the earnings records by virtue of the payroll job flowing to the employee job, to the payroll journal, into the ledger. But for the contribution, it would only be able to come from here because this is where the contribution is defined and only really here. So that's why this is an applicable field for mainly the contributions typically. For leave, let's just kind of quickly do a leave. Let me just kind of go to type. All right, let's go leave, personal days. I'm just making that up. Okay, so that looks about right. Personal. So I think we talked even earlier, if you remember in payroll setup, we had labels for option 1 and option 2. There is the option 1 and option 2. So you can label them something different. Out of the box, kind of we support for paycheck reporting purposes, defining a control or leave control as sick personal. Sick personal was, I think one district had that combined or something. I can't remember what it was. But mainly it's sick, personal, vacation, docking, and then the two optional ones are the ones that show up on the paycheck. Obviously, you can define others. Is fine. And do not include, it still could be a leave. You just say do not include, just means it's not on the paycheck, really, is what it's really not on. That's really what we're talking about. Used for doc pay. So in this example here, if this is a leave, and by the way, a lot of these fields will be grayed out for different types of controls. So the controls are generally using either the type field or the GL post type field to determine whether these options are live or not live. So right now, let me see if I can put something. Actually, I can't put something in there, but normally I might not be able to. I can see here I can, and we'll explain all these as we kind of go through because they're not applicable for this type of record being a leave record. So it's kind of a multi-purpose table, and so these fields are kind of only applicable for certain situations. So that's why it's like that. Used for doc pay just tells us if we are using automatic docking, and I don't know if we really are, but if we are, then what is the docking to use? If a person falls below 0, they're negative now, and we want to bring them back up to 0 and dock their pay. Well, what is the earnings control in which I can book that docking in? The leave unit should be days or hours. Which one is it? And the pay type really doesn't matter because that's really more for earnings. Let's actually switch now to an earnings record. All right, let's just go to earnings. We'll go to earned comp sal. Okay. I'll close that for now. So in earned comp sal, now we get this guy here. And so if I went to earn regular, he'd be set to hourly. And again, need to be consistent between the earnings code that's on the payroll job flowing to the employee job and how it's marked pay type versus the pay type here. Need to be consistent. Now the system forces the consistency because when you're on the payroll job and you've declared this job as an hourly job, when you do the lookup, it only shows you the earnings codes that are marked hourly. Matter of fact, that's one of the biggest problems is that you've actually set up a new earnings code, but you don't have it classified correctly. Then you go over to the payroll job and you want to stick it in there, but you can't seem to find it. It's because you don't have it set up right here correctly because it is filtering those lookups over the payroll job and an employee job by this pay type field. So it's really important to get that right and to not mix and match. People have tried to mix and match and to use a salary job that's marked salary here on an hourly job on purpose. And I said, no. You need to set up another earnings code. And they said, no, but I want to use the same job. I said, no. You can't use the same job. And for some people, make it salary. And for some people, make it hourly. And some people make it per diem. That is a recipe for a disaster. It's outside of the design of the system. Please do not do that. And we try to enforce that, but people do whatever they want to do sometimes. But that's something that we definitely don't want to see. Okay, do not use allocations. I would think that maybe I'd see it on the GTL. So let's kind of go to the GTL. Earnings. It's a GTL fringe earnings. Yeah. Do not use allocations. There it is. So what that simply says is when the earnings is being used, and it says you can only check this on an earnings record, go ahead and do not try to find the allocations. So then we go back to that payroll posting group, and then we go to that column called earnings. Okay, we still have to have a value of that earnings, even we are using allocations because the program still tests for it before it even gets to the point of not worrying about it. It's just kind of the order in which the way that everything validates. So you still need to worry about it. Requires payroll job number. So that field is not clicked, which is probably appropriate. But if I go to earn comp sal, I'm assuming it is checked. Actually, it's not checked. And so I'm not really sure to this day what that field is used for. Dan, are you still there, Dan, at all? No, he's probably.
Yeah, I'm here.
Yeah,
I don't know. I mean, I've never checked or unchecked that box.
Okay. Yeah, I have to look into that because I'm just not sure myself. Requires payroll job number. It's something that's interesting, but I need to kind of research where we're actually checking for that and so forth because it seems like. It may be that you haven't checked it, but maybe if you did, that error check online, if for some reason there wasn't a job connected to this earnings code is appearing in the journal, there's no job connected to it, it wouldn't know to necessarily produce an error, right, unless that's checked. So I think that's the scenario. The thing is that you always have that correct, so therefore you haven't seen that would produce an error check for you. You know what I mean? So I think that's really what it's going after. Use the default job allocation. I don't know. Do you know if that's being used in any of these guys here?
I don't think so. I mean,
Okay.
not that I'm aware of.
Well, let me explain it a little bit. I'll give you not necessarily a good example, but I'll give you an example nonetheless. So on the medical side, I'm doing the employer part of the medical. And the district decides, you know what, from a budgetary perspective, I am going to go ahead and basically allocate it only to the person's GL account string, if you will, that's connected to their default job. And even though I know they will work other jobs during the year, discretionary other jobs, maybe extracurricular or something like that, it will be, it's not. I don't care. I want to put the whole medical from a budgetary perspective to their default job. And what the system then, what you may want to do then is you may want the actual to do the same thing. So that's what this checkbox does. This checkbox says, you know what, take the entire medical ER and go ahead and simply, force it all to the default job allocation. And so when the person does have some additional jobs in that batch, it won't take any of that $400 amount, let's say, and put any of it to those other jobs. It'll put all of it just to their default job. And that can be advantageous in many places. It's not as much on the retirement side, because on the retirement side, if you have a job that's not considered to be retirement earnings, the system will be smart enough not to put any GL dollars there anyway. So it's really kind of more on fixed amounts that are kind of really all about budgeting, really, quite honestly. It's really about how they budget, I find, kind of controls whether they want to click that or not. Exclude from encumbrances. So we talked about encumbrances and how to create payroll encumbrances in a previous session, and we talked about which jobs were included in terms of ones that were being in scope. Again, the person had to have a contract limit and had to have contract balance for the system to see an encumbrance, but furthermore, the payroll job had to have it enabled, and the payroll control has to be enabled. And the reason that's important is really in overtime. So if you are doing encumbrance accounting with hourly employees, let's say maintenance workers, and you've got a budget out there of, whatever, contract limit of, let's say, $30,000, what people are trying to do there is they're encumbering, remember, based on their contract limit less what's been paid to date. Well, that's the question. If they're churning a bunch of overtime, I'm consuming their contract much faster. And I'm really not. It's just the system thinks I am. And so by excluding the overtime for encumbrance, then the system will do a better job of encumbering the correct amount. So it really gets related to overtime. Skip paid hours line is for like an earn regular, probably not a good example, but maybe some other kind, where you're keystroking in the time journal. And remember I don't know if you remember this, Brenda, but when we put in the one-time journal line and we posted it, we got two lines in the payroll journal, one for the earnings and one for the paid hours. If you want to skip the paid hours line for whatever reason and just get the earnings line and not track paid hours, you can do that. That's what this checkbox does, basically. So that's fine. Report to state. So a lot of times we have to do some type of reporting to the state, and maybe let's just say if some deductions of some sort and there's a code that the state wants, then that's a place to put that code. I don't know where that gets used between you and me. Overtime and comp time I will not speak about, as I've not done for any of this training, because that needs to be done in a separate training where we have all this new functionality that I don't fully know myself. So I've requested and others to present that. I'm not sure if anything's scheduled, Bill, at this point, but I think we do need to facilitate kind of a round table and a general training on the overtime and comp time calculations and capabilities of the system, which I don't even know myself. I don't know if, Dan, you do, so I think we all kind of need a little bit more schooling in that area. Okay, so let's talk about the override segments, but I just want to take a quick break and see if everybody's okay. I know, Dan, you were sending something. Were you doing an IM to me, Dan? Or not Dan, Bill?
No. Yeah, Bill did, I think.
Oh, Bill said be right back. Okay, got it. Yeah, I turned this thing off. I don't see what's going on. Okay, Brandon, you still there? You got coffee in you? You're still going?
Yep, I'm still good.
All right, good enough. This is a kind of interesting conversation here, I find. So I'm going to go to your AC Medical, okay, and I brought that up on purpose. Oh, look at that. That's beautiful. All right, so here, overriding segments. So we talked about this sort of magic of a miscellaneous accrual where this is below net pay and the system is trying to take the earnings from the earnings above, maybe the default earnings only or maybe all the earnings, but whatever. It's going through them, but it's got to create more of a substituted kind of amalgamated account string based on some logic, and this is where that logic goes. So what happens is you have a deeper part of the system, which I'm going to show you in a second under Navigate, which is called overriding segments mapping. And if you fill this in, that's great, not a problem. But if you don't, or you don't specify all the conditions that need to be met, then the system comes back to this screen here, and this is sort of like that else. It's like a case statement. Do this, do this, do this, do this, else do this. This is the final kind of answer. And what we mean by this is that of all the different fund GL account and the 8 dimensions that the system allows you to work at, they're telling us just everything stays the same building, same program, whatever, but their object switches to 241. And 241, of course, we all know is medical and hospitalization. So that's kind of the last chance Texaco, if you will, when I look at that. But the overriding lines, the reason I can tell you got a bunch in there is because that tells you how many you have. So if I click this button, and by the way, the only difference between clicking this button and this button is this will come up in a non-edit mode, so I have to click the edit button. If I click here, it'll be in the edit mode, and I can click the view button. It's the only difference between the two. Otherwise, the same exact page, same screen. So what Dan has set out here on these 18 lines, and by the way, if you notice, there's an up and down arrows here. And it says, use the up and down action buttons to indicate the order a match should be determined. Generally, the most specific the record, the higher it should appear in the list. If no match is found, the system will use the values on the payroll control card. So look, I tell you everything there. You don't have to even remember any of that. Basically, what we're saying basically is, and if you look at these originals and then assigned, I mean, in some ways we should just have a line between there, right? I could probably put a line in there. So let me just actually see if I can do that. Yeah, I think that's right. No, I want the line up. See what this looks like. Yeah, I think I've done this before, but I know. I think I have to scroll back or something. No. Yeah, so for some reason the line didn't work, and I never could. I know why. I know why it doesn't work. Yeah, when you put a line in a place in which this button's not showing because you guys don't use shortcut, you don't use that. If I move it up one, it'll actually work. It's just weird because that option's not on your screen, so the freeze pane kind of doesn't know what to do. It's kind of like freaking, But if I do it here, I believe the freeze pane will in fact work. See, I don't know if you can see that, but now the freeze pane is working. So anyway, so think of it as left of the freeze pane, right of the freeze pane, in the sense of, if this, do that. That's how I look at it. So what we're saying is that if the person is 111, do 241. And quite honestly, I don't think he had to do this. I mean, in some ways, maybe he did. Let me go back. What was the 241 is the default, right? So really all he had to do, he could kill these rows right here, right? And they would make no difference. The system would still return the exact same results because simply stating if it gets through all these and let's say it was 111, what's going to go and say, are you 141? No. Are you 142? No. All you way to 149? No. When it finishes, it'll go back to the card and then use 241, you see. So really that's all he had to do. The other question I'm wondering, are these filters or not? You can't put a pipe in here, can you, Dan?
You can't put ranges or any kind of filters. Doesn't like them. I think you can put them there, but yeah.
No, you can't even get them in there. That's fine. That's cool. Yeah, so technically speaking, I think these rows could be blown out and you would get the same result, right?
Yeah, I think, but I think from the district's perspective, they want to, it's easier for them if they see it here.
Yes.
To go, okay, if it's this, it's this.
Right.
If it's this, it's this.
Right.
Yeah, but I agree. You could just blow that out and
Right.
It would be the default. So.
Yep. And again, the up and down concept would be if I want to move this higher, I would just go up and it would move it there. And move it down, it goes back down. Because the order in which this is happening, what's happening is the computer's going to the top one and saying, are you true? And if it is true, it exits with the assigned value and it's done, right? And so that's why the order can be important. Not in this scenario. In this scenario, you're going, what? It doesn't make any difference. But sometimes it's like if it's fund 1 and the object is this and the subject is that, and I mean, it's just like, what? And so, but else if it's fund 5, on Tuesdays do this, so when it's kind of using multiple components of this, when you start looking at that as a requirement, then this order part will start to make sense to you. It doesn't make sense in this scenario at all because it's all one single thread of logic. So anyway, but that's it's straightforward, but it's powerful and it's important, and that's pretty much how that works. So file attachments can be useful if you do have a document, maybe some tax tables, tax regulations, something like that related to this control. By all means, put it in there because then people can just click it and open it and see it, and that kind of helps. All right, so we're going to go back, open up this general and calculation, whatever. All right, just going through here, nothing really too exciting there. Actions copy, we talked about that. So let's talk about navigate. Ledger entries, I'm not going to show you because you already know what ledger entries are, and they're just going to bring up the ledger entries for this control. So that's all it's going to do. One thing to note, though, is when you bring this up, you get a different screen. It's kind of hard to understand, but you get a slightly different screen, and I believe the employees are listed somewhere. I don't even know where the employees are. I got employees over here, but the point is that this screen is it's a slightly different screen than the one you get when you're off the employee card. That's called employee ledger entries, and this is called payroll ledger entries, and some people expect it to be the same page completely, and so they move their columns all around, and then they kind of come to this place and they hit the ledger entries, and they kind of don't understand why it's not in the same order. Well, it's 2 different pages. That's why. It's kind of, they always give you payroll ledger entries, and you do it from a place different than an employee. So it's just 2 different pages. Comments is no big deal. File attachments, payroll control group. Payroll control group and calc orders is pretty much better handled from them. Over at the calc order place, we're in the administrative area, which we're going to show you in the control groups. But I'm going to go through tax form classes, and then I'm going to refer to calc methods, but I'm also conscious of my time, and I want to make sure I get calc orders and control groups completely done today. So anyway, let's go to tax form classes. This one's good, actually. So what the system does when it does the W-2 and deciding what box it goes into is completely 100% controlled here. What's nice about this is that you can process all year, not have this at all set correctly, fix it, run W-2 and go, voila, it now works. So maybe it didn't work when you first ran them, but then when you put this code back on the system correctly, it did work. So this is an area that's real important. Let's go to FIT as an example. Just kind of taking up a few randomly. Do I have a filter? Yeah, I have a filter set, sorry. Well, another way, by the way, to do it is just go code and go FIT. There we go. All right, navigate, tax form classes. Okay, so here, if you think about what this is telling us is, and let's just take the W-2 as an example. So go into box 1, normal. Okay, the sign is normal and tax amount. The reason the sign is normal is because tax amount is positive. So there's no reversal. It doesn't multiply. It does not need to multiply by -1. When it goes to box 2, which I'm assuming is box 2 on the W-2, which we all know is federal income tax withheld, then the system is saying reverse the sign and go ahead and use payroll amount. I'm not sure you can switch these here. Can you switch these? Yeah, I guess you can. But I think what really happens is that they're also set here. Okay, they're kind of set here. And so what happens is that they come in. As you type that 2, it just brings in those values. Yeah, you can technically override it. I don't think you should be doing that. So I'm just trying to make the point that if you do get something funky on your W-2 and all of a sudden your signs or all your withhelds are
reversed, it might be that when you go to the lookup here, it's set to reversed, but for some reason it's just somebody just accidentally just hit an F8 key or something. It's easy to do it, and that's why it's doing that. So you always want to, when at the end of the day, you come here to this payroll control, you look here, that's what the program is doing. So even though you can kind of see what this guy's set up here as a master setting, it's really kind of driven by this guy right here. So forth and so on. So just keep that in mind. Again, these are different boxes for your pseudo return and, of course, your 941 as well. So this just kind of give you a sense. I'm not going to explain all of them. Dan, you got a comment maybe on this?
Well, just where you might, first time you run the 941 for the district, sometimes you'll get a big difference in your cents or fractions, and it's probably because something hasn't been set up right for the 941, and it's not pulling it in and accounting for it in the Medicare wages and Medicare tax, like the fringes or something like that. So you have to. I'm trying to get better at getting that set up front, but sometimes as you're going through copying these and creating controls, things like that, it gets kind of crazy. So,
yep. Now, Clyde City right here, just in Clyde City as an example. So, box 18, I don't see the sign in the source field on this. You know what I mean? Now, maybe this has gotten.
If you don't use it, I think it goes back.
Oh,
to
it does.
The default.
It goes back. Okay, that's probably what it is. Yeah. So it doesn't. So you don't have to fill it in. In other words, if I type in 18 hyphen Clyde, well, CLYD. It's not bringing. Oh, so it's not bringing it in. So I guess if you leave it blank, it goes back to default. Thank you for that. I didn't realize that. So that's interesting. So, but it doesn't. That CLYD is not the code that necessarily will appear on their box 20, right?
Right.
That's coming from the locality of the reporting authority. So it's coming from, really this reporting authority right here. Although I don't think I get to that exact screen right here. No, because
you can't see the locality.
Unfortunately, it's not the exact screen. But I can cheat and go help about and just look at the table itself. and there it is. So Clyde will appear in upper and lower case as it's typed like that. So you may want to uppercase that only because sometimes on tax returns, they're kind of like all these small boxes. Nobody can see anything. So sometimes all caps is better. Anyway, so I just kind of try to show you tax form classes and the fact that they're kind of, changeable right in the last minute. That's the nice part about them. But you just need to know how to handle them. And it is true that the 941 and W-2 setups, some of them can be a little complicated. And if you're having any struggles, contact us and we'll help you. And again, I have seen where it's just been more of a globalized issue that Ben has written some SQL scripts just to kind of then run across all the databases to kind of fix them all at once. And I know we had to do that this year. Somewhere in 2014 we did that. So anyway, something to think about. So before I guess I can go to calc method real quick. I want to just kind of really just more give a summary, 10,000-foot view of it, because next session, that's what we're going to spend pretty much all our time in. So in the calc method, when you go into a calc method, you can have multiple lines here. And the multiple lines are based on changes in the algorithm over time. So you will see often 3 or 4 lines and date-driven. And, of course, you're typically only going to focus on the last record, the lowest one, and that'll be the one that you're currently focused on, either to look at, edit, copy, and so forth. If you're making any change, you generally are going to be copying. You're not going to just change it because, again, you don't want to obliterate what was. So let's say you detect that 1115, we want to make a change. You'll do 010115 as an example. You'll hit OK. And generally speaking, what I recommend doing, and you don't have an unlimited amount of text here. Okay, I'm already stopped at this point. I do wish this was a bigger field. But here is just an internal note to ourselves to say kind of, okay, what's different? Flat amount for all earnings, no limit. And it says the same thing on the second line. It's kind of odd because you were in there for a reason. You went in the OR for some reason. Well, why were you there? So most likely, maybe you're getting rid of the limit. Maybe there's no more limit. Or maybe you are putting a limit. I guess this is no limit. So I guess you could say limit. Let's say if that's what you were trying to do or something like that. I'm just making that up. And so forth. So that's just a little housekeeping there. At this point, when you want to see the algorithm of what's actually happening, that's what steps is for. Okay, so I click on steps, and there we will stop. I'm not going to go any further. We're going to kind of come back to that tomorrow and heavily get into this whole screen and everything that makes that up. So at this point, I'm going to not get into that, and I can show you some just to give you a preview of what's going to come, and I'm going to delete this line because everybody knows that's just bogus. I'm going to go to the FIT calculation. And I think the FIT, and I don't have to open up the card. I can just simply go here, calc method. You can see it's changed a few times, steps. And so now it's getting a little bit more complicated. So again, this screen is probably, hopefully, a little strange to you. It probably is strange to you. And this is the closest thing that implementers and support people get to really to programming, because this is really in some ways programming. It's just programming in a very weird language. So that's kind of what this is. And so I have to teach you the language, right? That's part of the goal here. But I'm going to skip that now because I want to get to some fundamental area of the system that's important just from a housekeeping perspective. And then at that point, we'll see where we're at, 327. So, okay, so now I want to get into the areas called payroll control groups and calc orders, really is what I want to get into. And then once I've got them understood, we'll put them behind us, and then everything else is all related to that language we were just looking at, except for activations we won't spend any time on. But everything else, rates, brackets, base amounts, method step classes, and method steps are all part of that area we were just in. They're all used in conjunction with each other to create the algorithm necessary to do the calculation needed. So that's kind of why. And also, rates particularly affect how you data enter at the employee master level when you put in a rate. So that one's also kind of front-facing to the operator. But almost all the other ones are kind of behind the scenes, if you will. I'd say brackets, base amounts, method step classes, and method steps are all behind the scenes to the payroll operator. They don't need to know anything about them, and they'll survive beautifully. They may want to know more about them. Linda's on the phone, so she's curious, so that's great. And I believe that really Trecca would be doing a good service over the years to maybe train them on at some level. I question on what level depends on, I guess, the operator in some degree. All right, so let's talk about control groups and calc orders. I think control groups is probably the simplest one to talk about. So let's go there first. Okay, typically you're going to find a master control group. If you remember in payroll setup, we have a default control group. And typically you're going to have one control group with all the controls that are necessary for that employee to function in that master control group, and you're going to set master on the payroll setup. And that's pretty much that. The other ones typically are only there for your luxury, and quite honestly, they don't even need to be there. As a matter of fact, I'm going to just get rid of them because I know I don't need them.
Those were just used when we were as we added controls.
Right. And I'm gonna simulate that for her in a little bit. Exactly. So the master control group, you have one group. You typically would leave it at rest here. You may have one other. The other one typically is called temp. I like to call it temp because it reminds myself that it's temp and it wasn't anything for real. And the reason we bring this up, Brenda and Linda, is that the master control group is kind of like has all my controls and it copies all into the employees, but now I need to set up a new control, brand new control. Well, normally, how's it going to get to the employees' records? Well, I could, in theory, possibly put it in the master control group and resync the master control group with all the employees. And I could do that, and it would work fine. It would add just that one new control. The problem is it'll take, an hour to run. And none of us want to spend an hour watching the computer do something. So we never do it that way. We always create a temporary control group, put that new control in there, blast it into the employees, which will take just a few seconds, and then just hopefully kill it or leave it there for the next time. But that's kind of the technique of why we set up these little mini ones. It's just a way to blast in a new incremental control that isn't there. But from this point forward, let's just say you're not creating new controls. If all the employees have all 180 of these controls, whether they're blocked or not blocked, they all have them, then nothing needs to change. There's no new controls coming in, so nothing needs to happen. And when you onboard a new employee, since we put in on the payroll setup the default for the new control group, well then as I data enter, John Smith, it's going to go ahead and create those 108 controls, and boom, I'm done. Because remember, the employee pay controls have to be at the employee level for the system to operate. When it's going through to calculate, it's looking through those employees' payroll controls, not the master controls, if you will. So this master control, the way I look at this group here, is just a copy from. That's all it's for. It's not anything that's used interactively. It's just kind of a technique to get from point A to point B. It seems like it's like a big waste of time. Why can't the computer just be smart about all this and so forth? But it comes from the ability to do some incredible sort of customizational capabilities where people have different control groups going differently to the general ledger, or different controls, if you will, going to the different general ledger, and they're coming out of their paycheck at different times. I find that with the number of employees we have in a school district, that's just suicide, and nobody really wants to run a business that complicated. So we kind of almost, from a practice perspective, try to encourage all of our clients not to get into that level of complexity. So that's why we kind of, it seems a little bit crazy, but it's really trying to keep it simple on purpose. In here, when I go into the pay controls, we have some very important fields here. Fields are important for how they're basically not clicked, or not filled in. And so the payroll control name is not really a real field. It's just looking up into, it's just a flow field. It's not real. So it's just kind of telling you what control you're in. They're all listed here. Okay. So in theory, probably Dan, who's did it, set them all up. The monthly schedule payroll posting group comes in automatically. So if I were to delete this value right here, I just want to simulate this. I'm going to go ahead and delete it right now, and I'll be able to. It's not going to stop me. It doesn't know better. If I do new and just put it right back, I just want to show you what it does. Okay? So it dropped in the monthly schedule. It dropped in the payroll posting group. We, as implementers, all do this. Whoops, we do that better than I just did. We blank it out. Why do we do that? Okay, because, as I said before, if you leave it blank, then when we copy it to a new employee, it's going to come in blank. And then if we change it at the payroll control card level, it'll take full effect. So that's why we're very disciplined to make sure that our control groups have the monthly schedule and payroll posting group blank. I mean, unless you do want to get into some variability for the same control, but I can't imagine if you have, let's say, a loan, a particular type of loan, or let's say a dues deduction, that you want for some employees that exact same dues deduction to be on the first check for some employees and on the second check for other employees. If you have that, I would kind of go, what's causing that? Tell me more. Tell me more. What's going on? I need to understand more about that. And probably through that discussion, we'd find out they're trying to solve some problem that we can solve a different way. So that's kind of how I would be approaching if somebody asked me, I really want that. The auto-activate. The auto-activate is something that we set up at K-12. It's not part of the base product. We did that. We find it's very important. Let me explain. So we found out fairly early in, I'm talking about going back years now, that the time that it took to calculate a payroll was completely correlated to how many active, and I use that in bold, how many active controls the employee had on their employee payroll controls listing, if you will. So if they had 108 controls and they were all active, the system would go through, and even though maybe there's nothing to do after it finishes all the algorithm to see that this person doesn't have a rate or whatever, so therefore they don't have to have it, the system is spending precious computer cycle time trying to still figure it out. So the game has become about not activating controls unless they really need to be active. And to make that simpler, when we put in the rate or we put in the other auth or the tax auth, it will activate it on its own. We kind of wrote that a long time ago. And so since we manage it kind of automatically, we're kind of just getting, hopefully, the minimum number of controls active to make that employee correct. And by doing that, when we're talking about doing in North Carolina, I think we have 10,000 employees on some of the runs that we're going to be doing. I know they're at Rowan, and I think Rowan's at like 7,000. So we're getting ready to do a 7,000 employee payroll. And so you can understand that when you're contemplating 7,000 to 10,000 employees in a pay run, all of a sudden you have to think differently. And so that benefits everybody, right? Because whoever has 500 employees or 120 employees, hey, you might not realize it, but we've done a lot of engineering to make sure that it can run fast and smooth. And that auto-activate, believe it or not, has a lot to do with that. So deductions are all not set to auto-activate. And so they will activate as people enroll them on those benefits. There's only a few that we will auto-activate, and I'll just go ahead and look at the ones that we have set up. And there they are. That's it. I don't know why Social Security is not there. Why is Social Security not there, Mr. Do you not have Social Security running in Ohio?
Nope.
Oh, so you guys don't have Social Security. So you're off. You're completely off Social Security 100%.
Well, there's a few. Every once in a while, there'll be an employee that needs Social Security, so then they go check it. They activate the control for that employee.
So that's the way you chose to do it, which makes sense. So that would be like maybe a student employee, something like that.
Right.
Okay. Yeah, and this select all, unselect all, I wouldn't press that button very much. I kind of that's Dan. Not Dan, but Bill. We had that mislaid. We fixed that now, but oh, there goes my headset. Hold on, guys. I'm going to switch over to other headset. My headset devices. All right. Can you hear me okay?
Yep.
Yeah.
Let me close my door and get a little bit more quiet. Somebody put a card on my desk, and I didn't even see them come in here and do that. It's like, how'd they sneak in here? How'd they do that? Okay, so that's why we have such few activated. So what that means is when we add a new employee, and let's just kind of simulate that now. So again, payroll setup, just to remind ourselves, payroll setup, defaults, control group master. Okay, so there's that. So now as I come into an employee, and I set up a new employee, find the number automatically, I didn't even notice. Yeah, hopefully it's good enough. I'm now going to get I get a paycheck from every district I ever heard of. They all send me paychecks. So that's done. Once I've done that, I can go to navigate, and I go to payroll controls. There should be 108 controls here. Okay, and the active flag should be on just the ones that we had marked, just like we said. Okay, now if I go in and set up a rate on this employee, and hopefully I'll pick a rate code that makes sense. Aflac, right? Would that be one, right, Dan?
Yeah.
Aflac. I do Aflac. Notice it says NA right there, by the way. And I'll say $10. I'm going to come off of it and back on. Well, maybe I'll hit F5. Maybe not. No, I don't know. Let me see. Hit OK. Let me go back to rates. Yeah, I'm not sure Aflac is one of them. Let's just pick a different one.
That's interesting.
How about electric? Let's say I live in your facility. I'm going to have this rename. Yeah, I'm not sure what's going on. Yeah, I don't know exactly what's going on. Normally it would turn on. Let me just do like this.
United Way. Should be, yeah, PEA. Why is it not?
There we go. I might be picking ones that never were fully realized. So that's an example where they probably, those are rate codes in which they may not be connected to a control properly or whatever. So, but I'm not going to talk about that now because that's part of our discussion tomorrow. But right now you saw that became active and the related controls. What that really means is this is the control that the system figured out. It figured out that ATPEA was listening, if you will, to this rate code called ATPEA, same code, same rate code, same. But that's just by coincidence. That's just the way Dan set it up. But what it did is, as I put it in, it automatically activated the control. And so that's what it means, sort of auto-activating it. You gonna say something, Dan?
No. Is that Brenda or I don't know, somebody?
Okay. Well, so the control groups are really used for that. So another use of the control groups is the part where we need to blast it in. So I'm going to go ahead and just simply, since this is all play data anyway, this is not your real system, I'm going to go to administration, going to go back to payroll controls, and I am going to go to AC Life, and I'm going to copy it to ACSTD, short-term disability, and that's pretty much that. I'm not going to worry about it, anything else about it. It's not, don't follow this. But anyway, so I'm going to do that. Then what I'm going to do is close the screen now, and the procedure would be I go to the control group, I go to here, and I want to add it to here because I still have to add it to my master because I still have to be prepared for that next employee that onboards, that comes into the place. So I have to come in here, ACSTD. It's going to copy this in. I'm going to not activate that because it's going to be a pretty rare day where you auto-activate anything. Auto-activate has to mean that that control is good for everybody. That's what that basically means. So I did that. That's great. But I'm also now going to go ahead and put an entire new group in, temp, and I'll call it temp, okay? Has no controls, navigate, okay, ACSTD, okay? Important thing, blank and blank, okay? Make sure you blank that back out, even for the temp. Simple mistake is not to do it there, and then you blast it, and then it's all over the place. And you can fix it, but it's kind of a pain. F5, there should be one code, just sort it, that's great. So the next step is a periodic activity. We actually talked about it in some of our task training. We kind of didn't focus on it tremendously, but under tasks, we have an option called attach control group to employee. And I told you in that training, I hate the word attach. It really should mean copy the controls from that control group to the employee. That's what it really means. That's what it really does. So I'm going to go ahead and click this button. And this is important to filter this correctly. Don't just start, oh, hit OK. You know, kind of be careful there because you want to think about how you're filtering it. And down here is the key one. You're for this employees, which control groups? I want to go ahead and limit it to temp. All employees. I don't care about any of this information because it doesn't mean anything. It's the setup fields is those two key fields, payroll posting group and the frequency, monthly schedule, sorry. But they're already blank, so there's no reason to blank them because that's what that checkbox does. You can blank them if you did fill them in. I teach you guys not to fill them in the beginning, so therefore that checkbox is not relevant. And existing controls just means that the person already has this control. Do you want to skip it or update it? And that, by the way, is the way that you fix it. If you accidentally do get it so it copies all that data over there that we don't want, the payroll posting group and the monthly schedule, you can just blank it back out and actually tell it to update. And that's how you kind of fix it. But hopefully you will never have that happen to you. I'll hit OK, and we'll count how long this takes. 1,000, 2,000, 3,000, 4, whatever. The screen went away. I don't know what's going behind me, but I'm sure it's done. That flashed, so it's done. Okay, so now if I go to an employee, any employee, no matter which employee I pick, and again, I can go back to, well, Amy's fine. And we'll go navigate, and we go payroll controls, and we look for ACSTD. There it is. It's not activated. No monthly schedule, no payroll posting group. I'm happy. Looks great. Okay? So I copied it in. So the last step that I like to do, and I like to teach the planners to do is, you know, you don't know the next time you're going to do it. Unless you're doing some more right now, why don't you just go to temp and blow it out and leave it back that way. It took you a second to put it in there anyway. So anyway, so that's control groups. There is one more periodic activity that we did talk about at one point, and I will just kind of address it a little bit. This one is just a report, basically, that just goes through and says, what would happen if I ran? You know, this is like the real thing. This guy here is a little complicated. What it's designed to do is if you kind of messed up the whole system, it'll refresh it in terms of the activate flag. It's designed basically to go back to the same algorithms that cause the active flag to turn on. You put a rate code in, or I put another auth record in, or whatever, and resync the employee's payroll controls to what you've picked. It's pretty rare where it's run. It's good for data conversions for go lives. It's not, and the reason you want to do it there is because you want to at least initially get the system set up to be optimized in terms of activation. But nowadays, I think when we bring in the master records, I think it does, as long as you're, well, I guess that's the problem, Dan, is the order in which we do things, right? And so you bring in a bunch of data setups with the employee master record, but your controls weren't quite right. And so it's a way to kind of go back
and say, okay, taking all your master settings based on the employee rates and the other auth, go ahead and fix my activation flags for me. That's what this is.
Okay.
It really was used for a conversion over from our older client systems into the newer ones, like the 5X systems, into this newer version, just so it, again, runs efficiently. The downside of this, I'll just give you the hole in this logic. The hole in this logic is that you have an employee rate or you have another auth amount in or record or whatever, and you purposely, because they've now opted out, whatever, just deactivated the control, right? You deactivated the employee control. Well, this routine will come back on, see it, and just put it right back on. And then maybe that deduction will kick in again. So that's why it's kind of be careful. Okay, so now I want to get into calc orders. Okay, calc orders, you definitely can have multiple calc orders. We have 3 here. Leave is probably just with 3 controls that they're actually doing accruals on. And most likely that's connected to the leave accrual system, which is fine. So this implies to me that we're not accruing during payroll, but we're accruing on a separate process in a separate batch. Maybe done by HR, maybe done by the same payroll person, but just in a different time frame, and so forth. The order in which those appear are important. So when it does the actual calculation, if the person has some hours or days in this case to accrue, for all 3 of those, let's say, it's going to be in that order. It's going to have personal first, sick next, and vacation third. Order matters. Now, I know that's alphabetical, but that's just happenstance as far as I'm concerned. And the reason I can say that is if you look here, it'll look very much more obvious because you can see this is not at all alphabetical. All right, and let's talk about the order a little bit because this is important. So the order here matters. If you need to move them around, you can't just insert it a second time. You need to delete it. So if I wanted to move, let's say, South 7 above 6, I can't just do a Control-C, come in here and do new, and then stick it in there because the system won't allow me to put it in there because it already exists one time. So I'm going to hit F5, discard that. But if I come in here and do a Control-C and delete this row, okay, and insert a new row, okay, but one thing I want to advise to you guys is that when you finally finish putting in the change you're making, and I'm going to explain this a little bit more, when I hit escape, a system will pop up. It's important not to hit like escape twice or cancel that because it needs to finish what it's doing. So be careful when you're in calc orders that when you do make changes, respect its need to do some housekeeping when it comes out. And that code is running on the close of the page, what's called on query close. Let it do its thing and don't interrupt it because we've had occasionally people interrupt it. And we get some support calls. What ends up happening is that a few controls just aren't seen anymore, and they're not in the calculation anymore. And it's hard for us to figure out what the heck is going on, and so forth. So that's just something to think about. One thing also you may encounter is that you can't put any records in between any more records. You've gotten stuck. The reason that's the case is that the system is using what's called auto split, and that's how it knows to keep it where it needs to keep it. And I'm going to explain why the order is important in a second. So if that does happen and you're kind of stuck and you can't insert anymore, it'll tell you that you've reached the maximum of the auto split. It'll actually use the auto split. It's kind of maybe what I should do is in my training tomorrow, since we're discussing error messages, it's one of those weird ones that people don't know what to do with. I doubt it's one that you guys have encountered. But Dan, have you encountered that one before?
Oh, yeah.
Yeah. And I know in the old classic system, what I used to do is I would cut the whole thing. I would cut all the rows and paste them right back, right? Is that what you do?
No, I create a backup order, copy it into the backup, and then if I need to make a couple of changes, I might make it there and then copy it back into the master.
Right. I believe that you can just copy rows and then delete all these and then paste it right back.
I agree, but I don't know. I like having that backup.
Let's do it. Let's take a chance. We're in Playland anyway. I'm going to go ahead and do this. So I'm going to go ahead and I hit this button here, which is select all. I'm right mouse clicking copy rows. I'm now hitting my control delete, boom, and then I'm going paste rows. Well, how about paste? Any paste?
What was your error?
Paste. No, that didn't work either. Yeah,
I think you have to have one record there for it to paste for some reason.
Yeah, it's weird. I don't know.
But if you just put in like I don't know, leave doc or something that you're not, now you can add to it.
Oh my God, you're right. That's not good. All right.
Yeah, I don't know why it does that, but
And the reason that these line numbers you don't see, but if you go behind the scenes, these are the line numbers we're referring to. Is this guy order number 20,000? So right now this line's 20,000. This line will be probably 30,000. Let me just confirm that. Yeah. So when I insert something in between, take a look at that one. And it's going to be 25,000. I could have guessed that. So basically what we're saying is that, I'm going to just delete this line. What happens if you keep splitting, meaning that if you keep coming into this guy and keep putting it in between, eventually you just cannot, it's kind of like a mathematical conundrum. It just stops after a certain point and tells you can't go any further. So Dan says his safe thing, and I don't disagree with him, is to copy all the rows to a completely different TEP name, delete them, and then copy them back, because that way you don't have to worry about it disappearing. But it looks like you have to maybe put a bogus initial record in there somehow, which I'm wondering, Dan, if all I really needed to have done is hit the new button, maybe. You know what I mean?
Well, all right, it may, if you click on the very left-hand column, that like in Excel, it might have worked. Instead of clicking actually in the pay control code cell.
Yeah, see, I can't do it there. I mean, I can do this. I can right mouse click and say copy rows, and then I delete them all. I wonder if I had to hit new and then maybe hit paste rows. Hey, gummit. I just don't understand why you have to put
if you do it clear on the left-hand side, though, does it allow you to do it?
Like that?
Yeah.
Oh, yeah, it does. Ooh, yeah, it does. That's good.
Yeah. So it depends on where you click paste rows at.
So it's really you're trying to add it. You're trying to add it into the row instead of into the cell.
Yeah, I think that's exactly right. So by clicking the whole line, it's kind of more of a row action, right?
Right.
Cell action. I agree. Well, we learned something new. That's good. But let's talk about why we care about the master calc order in the first place. So when we're processing in the calculate, there's a field on the screen, also a default in the payroll journal batch that says calc order. And so you can use, if it's left blank, it's the master calc order. And the reason it knows it's the master calc order is because that checkbox is checked. If I try to check another one, I don't even think it'll let me. I mean, I think it's like, it just doesn't, I don't think it can. I think you only have one master. But anyway, so when it's calculating, the order counts. And the reason it counts is that it needs to know about something before it needs to know something else. That's one of the main things. So the way that we have always organized it is really thinking about it in this flow, which is really earnings, usually pre-tax deductions, statutory type of taxes, post-tax deductions, net pay, and sort of expenses, if you will. So if I look here, I see earnings, which makes sense. Now, I don't believe between you and me that these need to possibly even be there, because these are all done through hourly salary. These are all time journal, right, Dan? Those three guys?
Possibly, yeah.
Yeah, so they may not.
I mean, the earned vacation might be something that is paid, like if you're going to pay out their vacation.
Right, but if it's keystroke in the time journal, my point about the time journal is that when it's coming in the time journal, it goes to the payroll journal, there's that field that's called calculated, which is set to no, because it came from a keystroke, if you will, as opposed to the calculate routine. And so the calc order is really the only thing about things that calculate, right? That's all it knows about, because the first step it does is it deletes all the calculated entries for that employee if there was already a calc there, and it already sees the non-calced entries, which don't need to be calced, and then just starts calcing, right? And so that's why you really want to limit your calc order just to things that need to be calced. So if in fact these are only coming from the time journal, I would argue that you should remove them and test it, of course. And if you think that you don't need them, which you probably won't, then I think you'll be good to go. These other ones can come from jobs.
and of course earned con sal. So these are all your salary ones. Those make sense. They have to drop in. Then we got all our pre-tax. Okay. Da 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 da. Then he's got cities, and I guess Rita is like a city, right? I guess they're all kind of like cities. I guess is that what that?
Yeah.
I don't know what Rita means.
It's Regional Income Tax Agency.
Okay, so you kind of see all these as the same kind of in a clump, basically, right? And that's how you're seeing them. Then you got all the annuities. Then, yeah, see, this is to me a little bit odd, which is fine, but I would normally put these guys personally up here, right here, between earned VAC and his PT medical. Because I want all my earnings to be together, and I don't like my positive numbers and my negative numbers to keep switching. Because when I'm looking at it, I kind of want to think positive, negative. You know what I mean? That's just kind of how I want it. That's my own personal preference. It doesn't really make a difference technically, I don't think, at all, because taxes haven't been done yet. So the key thing is that I just have to make sure that I got all stuff in there.
Well, here's one of the things we found, and this database hasn't been updated, but the group term life and vehicle fringe needs to be on top of Medicare fringe.
Yes, okay, because they're affected by it.
Yes.
Well, and that's the thinking that you have to do, is that everything is kind of interconnected, so you have to make sure that if something's depending on something else, the system, by going to calc order, can only know about stuff that's already there. And so if something is not there yet that needs to be part of the calculation, it will always return like a 0 and will not get you what you probably want. So that's an important thing, is to understand that. After that, you've got these refunds. I'm not sure why they're there, quite honestly, because they're post-tax, right? I'm not sure why they need to be there.
Right.
This is fine. You know, that's fine. But this is a little bit, we got to be a little careful here. Now, one thing that we have to all know is that typically this is not going to be part of the basis for doing, let's say, Medicare. I don't think it is, Dan, is it? Probably not part of Medicare.
No.
But the point is that it's appearing before that, and so therefore it theoretically could be. And of course, tomorrow we'll figure out why we are able to train it not to. And so the technique sometimes people would say is, well, why don't I put it after Medicare? And then I wouldn't have to worry about it. That's a fallacy, because then when you get down to after net pay and you've got the match, it has the same problem. It still messes you up. So no matter what, you got to really solve it with what's called base amount. So you have to use base amount logic. You can't solve it by the order in which it's appearing. But the key thing to understand is that you have to have your pre-tax deductions done and known before it starts doing FIT and state and so forth. So that's why you'll always see these below anything that's pre-tax. Okay, so generally speaking, I see it as earnings, then the fringe earnings, the pre-tax deductions. Once they're all done, I'm focused on the statutory taxes, FIT, state tax, and so forth, Medicare, Social Security. Then I do all my after-tax stuff. This is all after the utilities for the people that were putting them up. They're people from other countries we talked about. These are typically always, I like these to be last as well. These are those final deductions taking out the fringes, if you will. I'm not sure what that gift card is. I'm not worried about it. Net pay, and then we got the employer, Social Security, Medicare, pickups, whatever. This annuity thing is popping in there. I'm not sure what that is. I'm sure you guys probably know more about that. Medical, which was like dental, life, vision. We've got the board's got to pay a ton of money for retirement, and voila, we're finished. Sounds like a lot, but it is what it is. Again, any change you make when you hit escape, you'll get a screen that pops up. Make sure you let that screen work its magic. Again, as we talked about last time in the payroll journal, we do have now in the dispatch definition, we have the calc order, override calculation order. When we say override calculation order, now that you understand calculation orders, blank means master. Okay, so override means something different. So that's kind of how that works. We have been experimenting with it, and we'll talk about when we get to the salary update worksheet, using alternative calc orders. There is because to actually do the budgeting side of that whole system, it actually goes through a mock payroll. And again, speed matters. And why should we have it do a bunch of post-tax deduction calculations just to get where we're trying to get to, which is, again, just a budget. So those are the reasons. Another reason why another calc order similar to master should be established, where you've removed all of the ones that aren't necessary. And so I'll show you a little bit about that in maybe our next training, maybe not, because our next training we're going to go now much deeper into the rest of the the payroll control design. So we're going to learn a lot about methods, method steps, base amounts, brackets, some rates, and then put it all together by going to the payroll control and creating the method steps in the right order, and then how to test it. We're going to learn how to trace, and then test to see, well, what's failing? Oh, that's not working. Let's try this. Oh, that looks good. And that's how you begin to model what you're trying to do, and you feel like, okay, now I'm successful. Let me put it in production, which is really the master calc order, the control group. You do need to put it into production at some level, meaning you need to pick a guinea pig employee, particularly if you're working in production. We'll talk about that as well, how you sort of do this kind of during a testing phase while you're still in a production database. You need to do that often because it's just too laborious to do it in test. And so sometimes it's better just to do it in production and just do it in a safe way. And I'll help you with that as well. We're at 4:01. To be respectful, Brenda, I'm going to close out this session and look for Linda, you, or Dan, or Bill. Any questions, comments, or are we good so far?
I think we're good.
I'm good.
Good. Brenda, you good?
Yep.
All right. All right. Linda, you good?
Linda's asleep.
She's probably like, oh my God.
Just trying to find the
I
unmute
couldn't
button.
drink that much coffee.
Yeah.
Yeah. No, Brenda, so you feel like that kind of makes sense, some of the stuff?
Yes, it did.
Good. Well, that's amazing. Can you go in and do all this stuff now? You ready to go?
I don't know about that, but
All right. All right. We're going to give her Knox Career Center and let her rip.
yeah.
And Bill, of course, make this available. Training-wise, I think that was a pretty clean one, Bill, in terms of confidentiality and so forth. I don't know how you
Right.
felt. So I think we didn't really show anything compensational-wise or anything today. So I think it was a very generic training that could be
Okay.
distributed more
right.
widely. All righty. Very good.